What's going on, guys? It's Noah here, and in today's video we're going to go over how to read candlesticks. If you're just getting into TA, I highly suggest you get reading candlesticks down pat because it's really important to establish a strong foundational floor of how to read charts. And this is the beginning and the first step to do it. So what I'm going to go over is how to read candlesticks, how to identify candlestick patterns, and where they appear on the charts, and lastly the overall psychology of different candlesticks and the patterns themselves. So grab a tea or coffee or juice, whatever you enjoy, and I hope you learned something in today's video. Alrighty guys, so we're gonna get right into it, and I'm gonna try to make it as simple as possible. So keep in mind, what I'm about to go over can be applied to any time frame, but I'm going to be talking a lot about the daily time frame. So here we have two candlesticks. One's bullish, one's bearish, right? Now, this applies to any candlestick, but what they're trying to tell you is four main things: the high price, the low price, and the opening and closing prices of the day, or 15 minutes, 30 minutes, whatever time frame, right? So on the candlestick on the left, it's bullish because throughout the day it closed higher than it opened, and the one on the right is bearish because it closed lower than it opened. Now if you're looking at this, you can get a good idea that it opens at 360, closes at 5, makes a high of 520 and a low of 340, and it's opposite in terms of the opening and closing prices for the bearish candlestick. Now you might be thinking, well, I'm confused on how it makes the high and low. Well, I'm going to go over this in a different way, and maybe that might be a little bit easier for you to understand. So here we have those exact same candlesticks, right? But to understand what it's doing throughout the day, I'll explain here. So for those of you who didn't know, the stock market opens at 9:30 a.m. and closes at 4 p.m. So this is a daily candlestick, and what's happening is at 9:30 a.m. it opens at whatever price. If we're going back to this slide, it opens at 360, and then it starts to move downward in price, right? And it makes ways down to 340. And as it gets to 340, it starts to turn around. This is all happening throughout the day. And as it makes its way, it starts turning around, it goes higher and higher. It makes its way up to, I think it was 540. And then after it gets to 540, it turns around and it closes at $5. So that's essentially what's happening throughout the day. On the other hand, with the bearish candlestick, it now opens at $5, and then it makes a high of 540 throughout the day, and then it comes down and makes its ways down to make a low of 340, and then it ends up closing at 360. So that's just an example of what a candlestick is doing. This could happen on any time frame, like I said, and it might not look exactly like this, but essentially that's what's happening. So another thing I want to get into your head in this video is that these candlesticks, another way you could think of them is who's in control. So it's not just about, okay, the price ends up going higher or lower. It's telling you who's in control, the buyers or the sellers, and I'll get into more detail about that later in the video. But just to add on to what we were just talking about, another way to see the ebbs and flows and understand what's going on throughout the day in a daily time frame or an hourly time frame, I'll show you in the next slide. Okay, so in this slide, for example, you see a candlestick like this, right? And it says it's the 2-hour time frame. Now, this candlestick can be looked at in many different ways, but if you wanted to look at it in terms of the hourly time frame, the past 2 hours, what it looked like was this. Now, you might be thinking how? To get this, all you need to do is add two 1-hour candlestick, the opening price of the first one, the closing price of the second one, and then the low and the high points that either of them made, and then that's what marks out these candlesticks. Now what you can notice is between the open and the close is what makes the body, and then from where the second candlestick closed and the high it made, that makes the top wick, and from where the first candlestick opened and the low that these two candlesticks made, it makes the lower wick. So another thing you want to pay attention to is three things when it comes to each candlestick. How big are the wicks? How big is the body? And then lastly, you need to compare them against each other. So how big is the body versus the wick? Essentially, that tells you something, and I'll get into that as we go on further in this video. Now, as we move down to the lower left, this 1 hour time frame, the reason why it's this 1 hour, it looks like this, is because these 4 15-minute candlesticks. So within these 4 15 minutes, it opened, the first one, it opened here, and the last one, it closed at the same level. So that's why there's no body. And then it made a high on the second candlestick and a low on the third candlestick, and that's what makes this wick. Within this 1 hour, these 4 15-minute candlesticks is what makes this hourly one. And it essentially is the exact same thing for these two on the right. So these 5 daily candlesticks make 1 weekly candlestick. This one happens to be really bearish because at the beginning of the week, it opened up at a high price, and at the end of the week, it closed at a low price. And then exactly the same over here, this 1 daily time frame. On the hourly, it opened here, it made a low the next hour down here, but then the next few hours throughout the day, it ended up closing up way higher. It made way higher highs, but ended up closing at a higher price than it opened at. So essentially, that's how you combine candlesticks together to read them one after another. So it's important to be able to do that because it'll help you zoom in and out of charts. Okay, so now that we got a basic understanding of the flow of candlesticks and how to read them, how they move from different time frames and such, we're going to now get into the 4 essential main types of candlesticks. So in this first one we have here is the main regular candlestick. One's bullish, one's bearish. Now, what the one on the left is telling you is that there's a lot of buyers in control. It's telling you this because prices came from a low and it drove up throughout that day. There's basically no wicks, telling you there's basically no price rejection, which means there's not many sellers that day. So when you see the price drive from a low to a high price in a day, it's telling you the buyers are in control. And it's the exact opposite if there's a big bearish red candlestick, telling you the sellers are in control. The sellers are strong and they drove the price downward that day. And if you look at these two candlesticks, right, there's basically no wicks on them. It's telling you there's no price rejection. Each one respectively is very strong, but in opposite direction. And remember, this could be applied to any time frame. Another thing I want you guys to understand is it's really good that you're learning candlesticks, but don't ever take one candlestick in isolation and make a decision off of it. You're going to learn that you want to piece together multiple candlesticks to get a larger, bigger idea before you make the decision. Don't ever really make a decision just off one candlestick. Next, we're going to move on to the spinning top candlestick. If we look here on the left, it's the bullish one where we open at a low price, but we do close higher. What this candlestick's telling you is that there's really a lot of indecision in the market. This day, or within this 15 minutes, hour, 1 week, there was a lot of indecision. Why? Because there's a lot of wicks. There's big rejection in both directions, from lower prices and higher prices. Although the price did close higher than it opened, it's still telling you that there's really no one in control. Although the bulls are there, they're not really strong bulls. You could think of this candlestick as a reversal candlestick because it's not indicating anything in one clear direction. It could be letting you know that they're running out of buyers or sellers. The price could be reversing when this candlestick appears on a chart. It, of course, isn't a guarantee, but a lot of the times it could be seen as a reversal candlestick. The one on the right is bearish, and it's the same thing. Neither the buyers or sellers are in control, even though it did close lower than it opened. There's still price rejection that's strong in both directions, and that's telling you that there's indecision. So next, we have the hammer candlesticks. So there's the hammer and the inverted hammer, right? What are they telling you? The hammer is telling you that there's an extreme rejection of lower prices. So we opened at this level, prices went downwards, but then the buyers stepped in and drove prices higher, and it drove the price even higher than it opened at. So what that's telling you is that the buyers are strong and that they're definitely in control. This can be seen as a reversal candlestick depending on where it is on the chart. So this is a bullish candlestick. This is also a bullish candlestick. Although it is red and it's telling you that prices close lower, if we compare the wick versus the body, there's a rejection of lower prices larger than the amount of people selling. You see what I'm trying to say? So this could be seen as a reversal. This could be seen as a weak bearish candlestick. This can be seen as a strong bullish candlestick. There's different types of psychologies that you want to interpret when you're reading a candlestick. Although that this one's bearish, it's telling you that the sellers are weak and the buyers are actually those ones who are stronger in this candlestick. And it's the same thing with the inverted hammer. The inverted hammer is the same thing, but in the opposite direction. Now, this candlestick might look like a bullish one, but it's not really, like on a scale, it's not really the strongest bullish candlestick you could see. Why? Because the wick is so much larger than the body. There's a lot of sellers in control. So for example, the price of this on this day, the price of the stock opened up and it got driven up throughout the day. But then at some point in the day, the sellers regained control and they drove the price all the way down. And it didn't happen to close lower, but this wick is indicating that the sellers are definitely present. Now, when we look at the one on the right, it opens higher than it closes. So it's telling you the sellers are very strong. Sellers are in control for sure. And it could be looked at as a reversal candlestick as well, depending on where you see it in the chart. So this could be seen as a strong bearish candlestick. The next few candlesticks we have here are dojis. All these are telling you is that the prices opened and closed at the same level. Now, this regular doji is telling you it's an indecision candle. It's sort of like the spinning top. Price was driven in both directions, but neither the buyers or sellers are in control, and it closed at the same price that it opened at. So it could be indicating that there's a reversal coming in the chart. This candlestick here, the dragonfly doji, is a very strong candlestick for the bullish case because it rejects lower prices. When we compare the wick to the body, there is no body. It's just a large wick. So it's telling you lots of rejection in price. It could be seen as a reversal of lower prices, right? So it could be telling you there might be price coming downward in this direction, and now it's going to reverse. We run out of sellers. Buyers now come in control, and it's going to drive the price higher. Now, it's the opposite for the gravestone doji. This one is considered, the sellers are in control, right? It's considered basically a very strong bearish candlestick in a way, because depending on where you see it in the chart, you're really running out of buyers here. So the buyers get driven up throughout the day, but then they get completely wiped out by the sellers who are in control, and they drive it, closing it at the same price that it opened at. So those are the different types of candlesticks. Those four main types. We have the dojis, we have the spinning tops, we have the hammer and the inverted hammer, and then we have the regular plain old candlesticks. They're not all going to look exactly the same. It's impossible. There are going to be many different variations of all those four candlesticks. But what you want to keep in mind is the size of the body, the size of the wick, and then when you compare them together, the body versus the wick, it lets you know who's in control, right? So keep those three things in mind when you're reading these candlesticks. So I'm going to pop up in the top left corner now, and I'm going to explain to you 3 candlestick patterns. So we're going to combine everything we've learned in this video and apply it to multiple candlesticks in a row. It happens to be usually 1 to 2 or 2 to 3 is a candlestick pattern. A chart pattern is like several candlesticks in a row that combine a larger thing going on, like a triangle or a cup and handle, something like that. But I'm going to go over 3 candlestick patterns that are really common, that are easy to spot. And it's good to know these because there's of course many other candlestick patterns, but these ones will help you identify the other ones and get used to picking out patterns on a chart. Simply here we have the bullish and bearish engulfing patterns. The bullish one is telling you that there's a reversal in the chart. It's telling you that there's going to be strong buyers coming from a push to the downside, right? So you'll see that there's a push to the downside or sideways consolidation, and then we get a big bullish engulfing. You want to find these after consolidation in demand zones, because when you find these charts, it's telling you that there's a big increase in demand, which means buyers drive price higher, and It's letting you know, especially if it's coming out of or breaking out of a zone, that there's going to be higher prices to come. Now, on the opposite hand, though, with the bearish engulfing, it's letting you know that there's lower prices to come, because after a push to the upside, the sellers come in and they drop the price to let you know the more candlesticks a bullish engulfing candlestick happens to engulf, if you see what I'm trying to say, the stronger the push to the downside could potentially be. Keep in mind that trend and volume also play a huge role when this is happening, right? So it's not just this candlestick. You can't just see this candlestick pattern and go, oh my God, I'm going to go all in because I see a bullish engulfing. It's not always going to guarantee that higher prices come. Lower prices could come as well. But it's good to be able to identify it, because if there's other indications that you could find that there's going to be higher prices, it's a good signal. So here we have the morning star candlestick pattern. What we have here is another bullish reversal signal. We run out of sellers and then the buyers come in and drive price higher. Remember the doji, it's telling you that it's a potential reversal happening in the chart. Well, if this happens to get confirmed, it creates a Morningstar candlestick pattern, because it's letting you know that we are now leaving this zone. Buyers are now in control, and there should be higher prices to come depending on where you see it in the chart. On the opposite hand, we have the evening star, right? It's the same thing, but we're running out of sellers, we're running out of buyers, and the sellers come in control and they drive price down. Lastly, we're going to go over the Tweezer Bottoms candlestick pattern, or the Tweezer Tops. This is another reversal signal. It's telling you that there's a rejection of a certain price. If you look at these two candlesticks, two large wicks rejecting one price is usually telling you that there's going to be higher prices to come. Tweezer bottoms are a good strong signal to see. It could also look like this, two flat-bodied bottoms. It could look like that, nice. Or tweezer tops. So it could be rejecting two higher prices. This usually will indicate that there's lower prices to come, right? And again, keep in mind that this isn't just a guarantee. It could just be pause and consolidation, and then later on in a few weeks, prices happen to go higher than this level. So it could be just a periodic tweezer tops or a periodic tweezer bottoms, depending on how you look at it on the chart. Same with any other pattern. So those are the three candlestick patterns that you can go over that are pretty easy to spot on a chart, and it's good to just learn and teach yourself how to identify it. So what I'm going to do next is I'm essentially going to go over how to find them on a chart, where you could identify them, and then different ways on how to get better at identifying these candlestick patterns and how to read them on a chart. Alrighty guys, shout out to you if you've made it this far in the video. This is probably going to be the more beneficial part and the more informative part. So this is kind of like what I do to practice on how to find these candlesticks and candlestick patterns on charts. I'll pull up any chart and I go over and I basically try to find the candlesticks and the patterns and try to see if what I'm seeing makes sense. So just to remember, these are what you're looking for in the candlesticks, right? Any certain candlestick is going to tell you the high, the low, the open, and the close price. What you want to do to understand it is you want to compare the body and the wick together, and what size is the body and what size are the wicks. So once you piece those together, these are the four basic candlesticks. There's a bunch of different variations of them, but there's the regular, the spinning top, the hammer, and the inverted hammer, and then the dojis, right? So let's get into it. Let's just see if we could spot any on the chart. Well, right away, there's a big doji. What happens? This is also known as an abandoned baby setup, where there's a big gap up and then a big gap down. It's almost like an evening star, but you add a big gap up. So you see there's a big doji here and a reversal in price. You see another spinning top. Spinning tops usually indicate that there's going to be a reversal. What happens? We get a big reversal. At the bottom here, we get a big bullish engulfing candlestick. There's another doji here, which is telling you that there's indecision, and we pause sideways for a while. More indecision, and then we gap up. What else is happening? Now, if you look at all these candlesticks, right, in order, right, look at all this. This is telling you big fear in the market. So after big fear, when people are very fearful, that's when you want to buy. Because what happens after you buy is there's likely, depending on where you are in the chart, after a 60% drawdown in a chart, like there's going to be opportunity. So you look for these patterns, the big bullish engulfing. You could say that this is some form of a Morningstar pattern, things like that. What else do we got here? We almost got some sort of tweezer bottoms here that indicates higher prices are coming. Then we push up. Nice. Another set of tweezers. We push up. There's a dragonfly doji in a sideways range that's rejecting lower prices. That's good. You want to find these things because it's indicating that higher prices are coming. And what happens in a couple days, some form of a morning star candlestick pattern forms, and we shoot up for a nice ride, higher prices. And then over here we see a nice bullish engulfing that leads us into a big run. That's what I do. I basically just go over charts and I try to see where are the patterns. Is it trying to tell me something? Now, here's a good example. When we look at SCR, right? We had a big breakout, and now after the breakout, I wanted to get into the stock, so I waited to see it consolidate. Now, what I'm seeing here out of these candlesticks, right? After a big bullish move to the upside, we consolidate sideways. Now, what I started to notice is that look at these wicks. A big wick rejecting. At the time it was $1.28, but $12.84. Now look at all these wicks at this range. Look at this big doji telling us it's rejecting lower prices. Another doji rejecting lower prices. Big wicks rejecting lower prices. It's important to piece together these things because this was telling me that there was going to be higher prices early on in the stock. And that's how I made gains on SCR, because I was in early, rode the way up. Then I watched it consolidate sideways again, creating dojis that's showing strength. And then this big candlestick, right? Look at this morning star candlestick pattern. And then it's a huge bullish engulfing the past two, almost three candlesticks. And then we sideways consolidate for another big run. Look who's in control when we look at these candlesticks, right? It's clear that the buyers are in control here. But then we start to run out of pressure. We make all-time high, we get shot down. All-time high, get shot down. All-time high, we get shot down. And then what happens is, of course, we consolidate again sideways. Now, over here on MMED, we see big upwards momentum here. Now, after you make a big move in the stock, you consolidate, right? So we make a big move, we consolidate. The dojis are telling us that there's likely going to be a reversal. Some form of a morning star happens here, and we fly upward. That's beautiful. We want to see that, of course. What happens here is we get a big spinning top candlestick. This is telling us at the top of a range, when a stock goes up hundreds of percents, this is telling us that there's going to be likely a reversal in the chart. And then what happens is we push down to the downside, and now we've been consolidating sideways in MMED for quite some time. So there's a lot of resistance up here, and this is telling us big time that at the time there was going to be a reversal. That's how I was able to exit that day, because I recognized it. I was like, I know what's happening. This is like a volume climax. So I got out that day and I was able to reap all the gains on the way up, and then I was able to avoid all of this consolidation. So when we look at wheat, another similar here, we have a big doji at the top of a range. It's telling us there's going to be a reversal, comes down. And if you look at this, this is like an evening star. So we come up, big evening star, we come down, but there's gaps involved. So you can call that an abandoned baby setup. I don't know who makes these names. It's not me. It's weird, but that's the name of it. Now, when we look at this candlestick here, nice. Look at this. This is Air Canada. Look at this trend line. Beautiful trend line. What do we have here? Gravestone Doji at the top of a trend, which is telling you there's going to be a reversal because we're running out of sellers here, right? Same thing here. Gravestone Doji at the top of a impulsive move. We're running out of buyers up here. We're running out of buyers. It pushes down. And then what happens here is the same thing. We get an inverted hammer at the top of a range. And then what happens? We push down, and now we're going sideways. Look at this big hammer. These big wicks here on these 2 days are indicating that there's going to be higher prices coming, because during that day, prices were down here at one point, but the buyers pushed it all the way up 2 days in a row. That is very bullish. That doesn't happen too often in the market. When you see that, it's likely that there's going to be higher prices. Say you got in that day at the end of the day at the close, and you rode it for 1, 2, 3, 4, 5 days. You could have made a 14% trade. So depending on how much you size on your investment, 14%, that's massive. If you put $10,000 in, that's $1,400 right there. That's awesome. So depending on how you scale and how you do this, this is how you utilize technical analysis to make choices in the market. Lemonade, we got a big bullish engulfing candlestick here. Beautiful. At the bottom of a range. That's what you want to see. Another example of a bullish engulfing is down here. It's consolidating in this range, and then we get this big bullish engulfing out of this range. It's telling you there's higher prices to come. And then what happens is we get the big run. Same thing that happens here. We get a nice, now let's zoom in now. So when we zoom into the 2-hour time frame and we try to find that big triangle looks like in a 2-hour time frame. Now look at this here. We get boom, big beautiful 3 white soldiers candlestick pattern. So that's another candlestick pattern, 3 big green candlesticks one after another. That's indicating higher prices are going to come. So we consolidate sideways, big move to the upside. That's what you want to see. Now this 1, 2, 3, these 3 white soldiers, right, on the 2-hour time frame is showing you this big bullish engulfing candlestick on the daily time frame. Look at this big wick out of this range. This big wick is a hammer, and it's telling us there's going to be higher prices to come. Does it come right away? No, we do go lower. But if you held this trade, say you got in any point in that day, and you swung it up here, that's a 30% trade if you held it within 6 days. So that's how you utilize reading the charts and reading the candlesticks to your advantage. Now, here's where we are now on Lemonade. We have a big bullish engulfing candlestick that engulfs 1, 2, 3 days because it opens lower and it engulfs and closes higher than the past 1, 2, 3. We're expecting higher prices to come now. What we could see, for example, is a nice W pattern. So we could come up here, test some of these levels. That's what I'd be looking for in LMND. This is pretty much how I read candlestick charts. So it's all of this stuff. I really appreciate you guys for watching the video. If you learned something, give it a share, a like, subscribe. I'm going to be doing a bunch of these videos for lots of time to come. So if you have any ideas that you want to request on videos I should make, comment down below. I'd really appreciate it. But overall, I hope you guys enjoyed the video, and I'll see you next time. Peace.